We know there's institutional interest because we're talking to a lot of institutions, including state treasurers and public pension funds. And why is this? Because they're trying to figure out if this truly is a new asset class. And if it is, they must have a point of view. As a fiduciary, if there's a new asset class, which is uncorrelated or shows very low correlation in terms of returns relative to other asset classes, then what asset allocator does is it will take a position to increase returns per unit of risk. That's what happens with low correlation of returns. So definitely, now, are they moving whole hog? Not yet. And nor are the big wirehouses like the Morgan Stanleys and UBS's, Wells Fargo, Merrill Lynch, B of A. They're all waiting to see who are the winners in terms of the ETFs, because they do not want to commit to an ETF that will close down. They're going to give it, from what we're hearing, 3 to 6 to 9 months. So everything, the net inflows that we've seen away from those two spaces, really, it's part of it is our client base switching from GBTC into, and other client bases, into the ETFs, which are much lower fee.
Bitcoin is projected to surge beyond the $1 million mark well before 2030, according to the latest forecasts by Cathie Wood. This remarkable prediction comes on the heels of heightened institutional interest and significant regulatory advancements, notably the approval of the first-ever spot Bitcoin ETFs in the U.S. Wood has expressed concern that many are underestimating the investment potential of Bitcoin, emphasizing the importance of seizing this opportunity before it slips away. In addition to discussing Bitcoin, Wood offers her macroeconomic insights, shedding light on broader economic trends that may shape the future. Furthermore, she delves into her perspectives on Tesla and artificial intelligence, exploring their implications for transportation and technology. Stay tuned until the end of the video, where Wood reveals why the pricing of the Bitcoin ETF has not yet been fully factored in.
Ever feel like you're wasting your money on things that don't really matter? Stop. You don't have time. Don't miss out on this 2025 bull run. Educate yourself now. Don't spend $12.50 on junk. Educate yourself on how to be successful in crypto using our crypto cheat guide. Unlock the secrets of crypto and make smarter investments today. Visit the website now on the link in the description for your exclusive copy. Start your journey to crypto success today.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
You're right. We were very early into NVIDIA 10 years ago when it was $5. Now it's roughly $800. We rode it most of the way up, but I'll tell you what we did. And this is, as a portfolio manager, it's not one action, but causes in terms of another action. Last year, we sold in the flagship NVIDIA and put it into Coinbase. Coinbase, I believe, is at least as much as NVIDIA. And it is much less well understood. The whole crypto movement, the crypto asset movement, Bitcoin as a new asset class and so forth, is not well understood or completely accepted out there. So we prefer to go where others are not traveling as much. And, as we were moving out of NVIDIA, we were saying, okay, regulators are trying to crush Coinbase here, and we were buying it on every dip. NVIDIA happened to be one of the sources for that purchase. So it's not just what we do on the sell side, it is what we do on the buy side that you have to look at. And yes, we do hold it in the more specialized funds, but we've been taking profits there as well for reasons I just described. The price came down a lot, we would. If you look at our portfolios, what we're trying to capitalize on with a Palantir, for example, are the next stages of this AI revolution. What we're seeing in the GPU side of things is NVIDIA, all praise to Jensen Huang. I mean, just unbelievable company execution, vision, and so forth. And it's not over. It's going to last a long time. But there are going to be many other companies benefiting from AI. The productivity lift alone is going to be massive, the most massive productivity lift in history, we believe. And so this AI revolution is going to be broad-based and is going to benefit a lot of companies. On the GPU side, of course, we have AMD, as competition, but many people do not understand that there's a lot of other surreptitious competition evolving out there. Each of the hyperscalers is evolving its own chip strategy. You have a Tesla that has designed its own chip for an AI chip, the more specialized autonomous driving opportunity. And I think you're going to see a lot of companies developing more specialized chips. We know that NVIDIA, of course, will segment the market as well. So we just think that a lot of the assumptions for NVIDIA, that this is NVIDIA's market and it's alone, that those are changing. Yeah, so the biggest obstacle is staking. And I don't think the regulators will allow staking in this first round, if they allow the first round at all. We and one other firm will see our final deadline in May. If they reject our filings, then we'll have to refile. But my guess is they will move more now to a first come, first serve when this next round goes through. So if it's May, it will be without staking. If it's later, there's a better chance for staking. If it's in, I would say 2025, because I think legislators and legislation is starting to get involved here and taking it away from simply the regulators. It looks like that corporations are losing pricing power, and we are now beginning to see the unemployment rate move up. It went up to 3.9% in this latest report, from a low of 3.4%. So undeniably, it's on its way up now. And we do think it's because corporations are losing pricing power, their margins are getting hit. It's going to cause a couple of things. One, the labor hoarding that we've seen since COVID is going to diminish, and that will increase the unemployment rate. But then the second thing is it will accelerate the adoption of technologies. Innovation solves problems, and one of the things that it does is increase productivity, increase efficiency, and create new products and services. So we're pretty optimistic about our strategy in this environment because interest rates should come down. I think that even the Fed is going to be surprised at how low inflation goes. We think it could be negative this year. Well, I think the 24-fold increase in interest rates in little more than a year has shocked the system. We're beginning to see a reverberation of the regional bank issues. We don't think they are going away. Deposits are still outflowing broadly from the banking system. And there are increasing problems with commercial real estate. Most people know about the office problems, but multifamily units, multifamily apartments, we're beginning to see some distressed sales there as well. So I think that problem isn't as well understood, I think, and it's going to cause the regional banks even more problems. It's not if, it is when. That's the most important reason. Interestingly, in his last conference call, Tesla's last conference call, Elon said, yeah, I know I've been wrong about it, so I'm not even going to make a projection. I actually thought that was good, and maybe it has a better shot now. And we're looking at some of their hiring and their job postings and seeing rumblings in different cities that they're starting to get ready. We're focused on the technology. He is the inventor of our age, and this age is a very special age because the 5 major innovation platforms around which we have centered our research are converging, and 3 of them he is helping to converge. This autonomous taxi platform opportunity is the convergence of robotics. Autonomous vehicles are robots. Energy storage, they will be electric.
Right.
And artificial intelligence, where those are 3 separate S-curves feeding each other and should lead to super exponential growth. He has understood this idea that technologies are going to converge with one another. And that is the way he's been thinking. He's first principles research. Just because something's been done one way for a very long time, think autos, doesn't mean it's going to remain that way. And that's why he's going to win. He is so laser focused on technology. In the case of Tesla, the electric vehicle side, that is on automatic pilot. They are just scaling. And what he is doing is becoming, the manufacturer of factories. He's trying to figure out how to automate and continue to drive down the costs there. His focus is on autonomous now, certainly. And of course, you can say on X he's distracted, but he's really more focused on the innovation. How can I go back to the future where I started, which was in the payments app space, sold to PayPal? How can I turn this into not only a payments app, but an everything app? And I think he's hard at work doing that in ways that we don't know yet.
Cathie Wood's recent insights underscore the significance of seizing opportunities in both finance and technology. Her comments particularly emphasize the importance of investing in Bitcoin and overcoming hurdles in cryptocurrency adoption. Additionally, Wood sheds light on broader economic trends and the future trajectory of transportation and technology, offering valuable perspectives on companies like Tesla and advancements in artificial intelligence. Through her expertise, Wood simplifies complex concepts, enabling a clearer understanding of the evolving landscape of finance and technology. Her expertise not only illuminates the potential of Bitcoin investment but also offers invaluable insights into the broader economic landscape and the transformative impact of emerging technologies like AI. With Wood's guidance, individuals can better comprehend the shifting dynamics of finance and technology, empowering them to make informed decisions in an increasingly interconnected world. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.